Welcome back. And in our top business stories, Sultan Al Mansouri, the UAE Minister of Economy, and Nicholas Nahas, Lebanon's Minister of Economy, have decided to formulate an integrated action plan to further drive the economic relations between the two countries. The plan aims to strengthen cooperation in economic sectors, such as areas of investment, industry, tourism, agriculture, and clean energy, trade and services. It will also look to enhance cooperation in developing laws and economic legislations, as well as the exchange of expertise, especially with the UAE Ministry of Economy, who are currently developing about 19 draft laws, such as the companies law and legislations regarding small and medium-sized enterprises. Al Mansouri expressed the desire of the UAE to strengthen the frameworks of joint actions with Lebanon, adding that several UAE entrepreneurs are interested in investing in various economic sectors of Lebanon. The Lebanese minister praised the economic development in the UAE and expressed his country's readiness to provide all the facilities and legislation that will enhance the investment climate in Lebanon. Dubai Holding announced on Wednesday that the Dubai International Capital, its private equity investment arm, has reached a final agreement with its lenders regarding the restructuring of approximately $2.5 billion of liabilities. Under the terms, creditors will extend their debt for 5 years and receive a 2% cash interest coupon on the restructured facilities. An agreement has also been reached in relation to a facility of approximately $350 million of liabilities, where creditors will also extend their debt for 3 years at the unchanged contractual rate of interest. In a press release, David Smoot, the CEO of DIC, stated that the refinancing will allow for the implementation of the management team's long-term business plan to maximise the value of the company's portfolio of assets for the benefit of all stakeholders. Dubai property developer Majid Al Futtaim is looking to deliver 20 malls over the next 5 years, doubling its current portfolio. According to a local paper, a representative confirmed the plan at the opening of its 11th shopping mall, Fujairah City Centre. The 400 million dirham, 34,000 square foot area features 105 brands. Company representatives stated that a rise in local population, as well as increased employment and tourism, has spurred economic growth and in turn boosted the real estate industry. And let's now take a look at the stock indices across the GCC. Markets have enjoyed a strong first quarter. Global equities have risen 11%. Strong gains in banks and technology shares have provided a boost to the markets. Japan was the strongest equity market, up 19%. Developed market government bonds, by contrast, had a mixed performance. Some bond markets have continued to perform well, and US high-yield bonds gave a return of 3.2%. So what are the main challenges for next quarter? Well, we earlier spoke with Bruce Powers, the head of research at Trust Securities.
We have seen very strong performance in the first quarter across the board in global equities. Almost all markets were up. The FTSE index in Britain and the Germany's DAX index were up at 14% for the year. For the quarter, while the S&P 500 index improved by 12%, and it was the strongest year-over-year performance since 1998, while the NASDAQ market was up 18% for the quarter, largely driven by strength in the technology sector, particularly Apple. This is the strongest first quarter for the NASDAQ since 1991. As far as drivers go, of course, there has been some improvement in the economy and corporate earnings in some markets, not all. Overall, I think the economic recovery still remains fragile, and the performance we've seen in equities has been largely driven by the excess liquidity put into the system by the central banks. The European Central Bank, for example, pumped over €1 trillion into the system by giving 3-year loans at 1% interest to the banks in Europe, while the Federal Reserve in the U.S. is keeping interest rates at 0.5%, which is a record low, close to zero, and they've also given assurances that they will keep rates low for almost 2 more years.